Welcome back. Watching us here on Chartbusters. Let's talk about Fusion Microfinance. The intraday chart of the stock comes up for you. It's been doing well, outperforming the otherwise market, where they reported their numbers, though now is off highs in line with the decline that we've seen in the markets from the open. The business momentum for the company remains strong, though there was a sharp rise in provisions. So what caused all of this and what's the outlook? We have with us Devesh Sachdev, who's the Managing Director and CEO of the company, joining in. Thanks a lot, Devesh, for joining in. You know, the business momentum that remains strong. So let's focus on that for a bit before we go on to provisions and asset quality, etc. What is your outlook for disbursements and AUM growth for FY25? The last year you grew close to about 24-25%.
Good morning. Yeah, so I think first, if I summarize this, the last financial year, it has been a strong year for us. Overall AUM growth of around 24%. We did disbursements more than 10,000 crore. AUM is around 11,500 crore. 30% growth in PAT. First time we have crossed 500 crore as a overall profits. The expansion in NIM in a very tightening of liquidity situation. Our cost to income. If you look at all the parameters and very strong ROAs and ROEs as we have been guiding since our IPO in 2022. So there was a minor blip because of one state, which is Punjab, because of which the overall credit cost slightly inched up last year. But if you see the credit cost compare this between Q3 and Q4, it has come down, and we are very, very hopeful that next year the overall credit cost will be less than 3%. Overall growth momentum, what you asked, I think we are very focused that mid-20s is what we have been guiding, and we are very confident of achieving that. We are opening around 300 more branches this year. Around 18, this is 18 to 20% expansion in the network, which we do every year, in the similar range. So I think we are well poised, and we're doing all kind of investments, capability building, human capital to make sure that we are able to sustain this growth momentum.
All right. Hi, Devesh. Good morning and good to see you. When you know that credit cost guidance of 3%, the street is skittish on that, because sometime during FY24 as well, you were expecting that to come about. But as you said, the Punjab contribution to your total book, that's what's hurt you. Could you give us a definite number? Sub 3% means what? Should it be closer to around 2.5%? Point number one. And Punjab as a percentage of your total AUM, now it's come down to sub 3%. If you could give us a rough number, I think around 300, 320 crores.
Yeah. So, Nigel, you're right. So, Punjab is now 2.8% of the portfolio. What we have said is that more or less we have covered provisioning for any kind of hit in Punjab is baked in. Collection efficiency has stabilized. So, we do not see any new hit from Punjab if the way the collection efficiency is holding up. So, otherwise, I think it's a business as usual. We are very organic in nature, how we handle our customers. And when you talk about credit cost, yes, you know what our guidance is, less than 3%, Nigel. We will see how these 2 quarters are, and then maybe around H2, if we need to say anything about it, we will talk about it. But right now, we want to bring it to less than 3%, from 3.49%, what we have closed in the last financial year.
Would you have a guidance on GNPA and net NPA as well? You've written off 75 crore worth loans. I presume that has got to do with the blip in Punjab. What is your target gross and net NPAs?
Yeah, I think if you see the write-off which we have done is as per our policy. In the middle of last year, we actually accelerated the write-offs, because earlier the policy was write-off after 365 days overdue. Now we do after 270 days. So that is the only change. The write-off which you have seen in this quarter is as business as usual. The cases which have gone beyond 270 days. So as far as that is concerned, we are fully done. As for, I think the effort would be definitely to bring down the GNPA and net NPA, but I can only give you that right now we are only guiding that the net credit cost should be less than 3%.
Okay, all right. What about the NIMs? Could you tell us, what is the outlook out there? I think that was a bit of a bright spot, sir, because on a year-on-year basis, the NIMs are mildly high. On a sequential basis as well, it's higher. So what is a sustainable level? Because we know that the liability cost as well has been moving up. So what is the guidance you could give us, NIMs, and on your return ratios as well?
Yeah. So Nigel, good point on NIMs. Look, when we came to the market in 2022, we actually guided that the NIMs you will see will inch up. Primarily, one, because less interest reversal. The second is, we have managed our liability very well, Nigel. In a situation where there is a credit squeeze, costs have gone up. But if you notice that every quarter, our marginal cost of borrowing has gone down. In the last 12 to 14 months, we've got 2 rating upgrades from CRISIL. We are now A+ stable, which we got upgraded in October 23. So this quarter, it's around 11.59. We still believe that there is some room to grow the NIM. It will grow in the next 1 or 2 quarters. And then I think it should stabilize anywhere between 11.75 to 12%. We are seeing a better, even the cost to our, as the rating upgrade which happened in October, that is now playing out, repricing is happening. You will see cost of fund going down by some basis point, even in this quarter, the June quarter.
That's a bright spot then. What about your ROA and ROE targets?
Yeah. Our long-term guidance, Nigel, is 4.25 to 4.5% ROA, 18 to 20% ROE. So that is where we are sticking on. When we came to the market, that was our guidance. We have been delivering more than that. And that is our guidance for long term.
All right. And finally, from a more strategic standpoint, would you continue to be a microfinance organization, or at some point look towards being a small finance bank and then maybe, get a universal banking license as well? What are the timelines here? What's the strategy thinking here?
Right now, there is no such proposal on the table. Right now, we are very focused on building the franchisee. We started our MSME book in 2019-20. It is now more than 5% of our book, where we are focusing more on secured loans, especially in tier 4, tier 5 kind of towns. It is coming out well as per our plan. As per the RBI guidelines on the qualifying asset, we have a room available of 25% where we can do other than microfinance asset class. So I think that's where we are right now very focused on growing our microfinance book and MSME book. And on the way, we may look at other products as per requirement of a customer and the geographies where we operate. But there is no such plan to go SFB route or a banking route right now.
All right, take that point. Thank you so much for joining in and giving us all those details. Credit cost to be contained at around 3%, NIMs between 11.5% to 12%, with disbursement of mid-20s, network expansion of around 18 to 20% as well. Wish you good luck, Devesh, for FY25.